Welcome to Minds and Money Keynote Fireside Chat, Bitcoin versus Gold. My name is Michael McCrae, Mining Audiences Manager at KITCO. KITCO, your number one source for precious metal news. I'm with Trey Reik. He's Managing Member of Bristol Gold Group. 2021 was the year that Bitcoin hogged the financial news headlines. While gold is up 40% in the past 2 years, Bitcoin is up 400%. There just appears to be more interest in Bitcoin lately. In a comparison of search terms on Google Trends in the first handfuls of months in 2021, Bitcoin has spent more time ahead of gold. And in a note published in May, my guest says that Bitcoin has proven to be one of the most profitable speculations in financial history, but its volatility still precludes it as functioning as a store of value investment. Trey, thanks for sitting down with me.
Thanks for having me.
Trey, how do you look at the gold Bitcoin debate?
Obviously, a very loaded and important question. The way I like to introduce this topic is that I think most of the research on both gold and Bitcoin that I read, at least, has a very large shortcoming, and that is that it's overly narrow. Gold in and of itself, I've learned over a couple of decades, is the investment asset, at least that I've ever been associated with, that has the widest range of investment cues, right? Some people think gold's an investment hedge, other a deflation hedge. Some people think it's a risk on trade. Other people look at it as the ultimate safe harbor. Some people prefer the US dollar, which puts reflexive pressure on gold in stressful times. So there's this wide array of investment cues. Now, I don't know Bitcoin anywhere near as well as I do gold, I believe, but I have learned over the past 5 years of trying to understand the Bitcoin thesis that it has just as wide a range of investment cues as gold. So, for example, when you read an article or you hear an argument, it's always about one small aspect of Bitcoin. It's energy use. Is it a transaction enabler? Is it a money equivalent? Is it a store of value? So I've actually sat down and thought to myself, just to frame this, what are the categories of investment cues for gold and Bitcoin? And I come up with at least 10. The first are money proxy. Second would be currency proxy. In the hedge category, we have portfolio hedge, market hedge, interest rate hedge, inflation hedge, fiat debasement hedge. And I'm not exaggerating. And those are all slightly similar and certainly connected, but also distinct. And then you get into just simple investment grade reserve, and then decentralized asset, which has a lot of political implications, and finally store of value. So on these 10 investment cues or purposes that I can think of, store of value is a small component. And then if you take Bitcoin and gold and analyze its ability to serve as an effective investment for each of those categories, I would say that there's another 6 categories of assessment of the capability of gold or Bitcoin to satisfy that portfolio utility. And those would be infancy, immutability, volatility, safety, scale, and trust. So that's a long-winded answer, but if you take those and put them together, you'd need an Excel spreadsheet with at least 60 cells to analyze the difference between the two. So when the next time anyone reads a Bitcoin or gold article, notice how narrow the comparison is and recognize that speaker or writer or philosopher is looking at it in a very narrow sense. So I think it's more complicated than the app. Now, all of those things are related. I'm not saying that an investment grade reserve isn't similar to a store of value, but they really are different. If you were a family office in Denver looking for an investment grade reserve, your time horizon might be substantially smaller, shorter than if you were looking for a store of value. Now, that might be a 20-year analysis as opposed to a 2-year analysis, if you follow my point.
Let's narrow down on that, Trey. What is a store of value investment?
This is why gold and Bitcoin is such a great topic, because of all these existential questions. So that, of course, is open to question, but I would narrow that one down. I think pretty clearly store of value is something that if you have it in a portfolio in a range of circumstances and outcomes, the asset maintains its purchasing power. And I'm not trying to be cute, and we've all heard the analysis of gold and the men's suit and 5,000 years and all of these things, but that's why gold has that reputation. Personally, I think Bitcoin, even though it's been the most fascinating thing I've ever studied and has certainly created more wealth in the shortest period of time of any other investment in financial history, I'm actually a little surprised that it's even in the store of value conversation because of its volatility. Go ahead.
Oh, no, sorry, go ahead. You said it in the conversation.
In store of value, just to skip ahead, because I'm sure we'll talk about this, if you look at Bitcoin's history, which is only 12 years, and by the way, 12 years ago, we were buying Papa John's pizzas with, what is now $600 million worth of Bitcoin. So, and I'm not saying that's not the way it shouldn't have started, but it is a 12-year history. And in the 5 years that I've studied it, you've had the run up to the 2017 high at 19,000 and the run up to this 2021 high at 64,000. And if you look at a sort of trailing 12-month performances in each of those cases, I think it's 1,300% and 1,600%. We don't know where the 2021 example is going to end up, but we do know that from the 17 high, it went from 19,000 to 4. So, and again, I'm not being critical about Bitcoin other than to say, until you can get your trailing 12-month volatility range below 1,400%, I'm not quite sure why you're in the store of value conversation.
Let's switch to gold then. What makes it particularly suited to being a store of value?
So these are old, boring questions for everybody, I'm sure, who's listening, but gold has this stable above ground stock of something that is immutable and very precious in any society or to any culture. There is no society on the world that doesn't consider gold precious. There's this very large above ground stock, 188,000 tons, and the stock to flow ratio, I think, is what's made gold not even default money or to go that far, but a good store of value. In other words, there's a certain amount, it's above ground, it's precious, very difficult to make. It can't be printed or artificially created. And there's a very, very small annual addition to that stock. Now, Bitcoin, everybody's very focused on the 21 million hard cap, just to skip ahead a bit. And that is an important quality to Bitcoin if it holds. In other words, it's a algorithmic programming hard cap. And in my opinion, we'll find out when we hit it, whether the people who mine Bitcoin, if it's not in their best interest to have it be a hard cap. It'll be interesting to see if that's amended or changed or softened at all. And then the other problem with Bitcoin is, although I do believe Bitcoin has a huge lead, at last check, and every day it changes, there are 11,775 cryptos or stable coins or whatever you want to call them, tokens. About half of them have measurable value. If you add up that 5,000, it's a couple of $1 trillion, and about 10% of it trades every day. So do we know Bitcoin is going to be the ultimate winner? The Bitcoin people certainly believe that, and it certainly solves certain things that would suggest it. But Ethereum, for example, which is the number 2 crypto, has outperformed Bitcoin by a very wide margin and offers some flexibility for the future. My point is that the hard cap of Bitcoin may not necessarily be as attractive as it sounds on paper, because we're not even sure Bitcoin's going to be the ultimate winner in the crypto space.
Let's stick with some other criticism that you did mention in your main note. I think one of the primary ones was just that, paraphrasing for you here, Trey, but there seems to be some silliness or maybe some flipness around the whole Bitcoin space. Yeah. And you mentioned Elon Musk and his tweets as being a primary example.
Yeah. Bill Gates gave an interesting interview about cryptos, and I'm very familiar that I'm falling into the trap of asking the wrong person. In other words, why would we ask Warren Buffett about gold? he has the most to lose of anybody else because he has more securities than anyone else. And I understand Bill Gates is the last person, but he made an interesting point, which is if you don't have Elon Musk's kind of money, you should be careful. And, Elon Musk, I didn't really realize this until about 2 months ago, but all of this stuff is incredibly transparent, including how many Twitter followers you have. And I knew Elon Musk was a big deal, but he has 55 million Twitter followers and 170,000 per day join to choose his Twitter feed. Think about that for a minute. 170,000 people per day elect to follow your Twitter feed. You'd have a pretty big ego too, right? 170,000 per day. So if you have 55 million people following what you say, and some of his stuff can be a little colorful, so we won't even go into details, but I encourage people to follow it. If, he on February 19th, I believe it was, he said, we're going to accept Bitcoin for Teslas, and Tesla bought $1.5 billion of Bitcoin. 2 weeks later, it was up 48%. And I think a lot of the times the Bitcoin enthusiasts make a mistake that we as gold enthusiasts have made frequently over time, and that is to confuse short-term performance with tacit validation of a long-term theory. So in other words, if the Bitcoin guys don't necessarily see that 50% jump from the Musk tweet, when in fact, it's probably because of the Musk tweet. And then when he has backed away from it, or China has increased their surveillance, you get these wild moves. And I again, when we go back to the store, Bitcoin is a lot of things. The store of value is not one of them.
What are sovereign landmines, and how does that pertain to Bitcoin?
So and this is fascinating. I mean, no country on earth has really figured out how to handle this yet, how to regulate cryptos. The crypto people will tell you, well, that's the whole point, and they won't be able to. And if they try to outlaw them, et cetera, it will only make them go up, which of course is what we have gold people have said for 20 years, right? In other words, everybody wants to know, what about confiscation? If the US government tries to confiscate gold, it'll just go up. So Bitcoin people, if they try to, it'll just go up. It's a very natural response, and it's probably true. But if you look at what the last just couple of months, there's clearly been a coordinated central bank type response, not only ours and China, but even the Bank of Japan, which rarely speaks about anything of this nature. Kuroda was pretty specific about Bitcoin regulations. And China most recently, I think 3 weeks ago or so, reiterated a long-standing ban on cryptos, and that's what caused the 35% one-day decline in Bitcoin, about a month ago. So and then the last thing I'd point out is that our fabulous regulators have started to really narrow in on Bitcoin, and the Treasury issued a guideline, I guess 3 or 4 weeks ago, about all Bitcoin or crypto transactions over 10,000 need to be reported to the IRS. Now, if you're a crypto enthusiast, why do you care? Well, the answer is, this is all supposed to be decentralization. So if you have a decentralized ledger, but if you use the thing that's decentralized, you have to report it to the government, or be imprisoned. That's a pretty big drawback to the decentralized nature of the underlying currency.
Now we've talked about that regulatory risk. We've also talked about its volatility that has also been driven by, and again, kind of a paraphrasing here, an unseriousness of it. What's going to happen to those people? Are they looking for a store of value, and is it just a matter that they're just going to be coming home to gold?
Mm-hmm. So again, going back to my initial way of trying to frame this discussion, store of value people are important, but they're a minority of the Bitcoin crowd, if you will. Now, not to parse this too much, but the more vocal people at the top, the tippy top of the totem pole of the Bitcoin cognoscenti, folks like Michael Saylor and the folks who are the most vocal, they're in this one category about hard money above all else. It's the greatest thing ever invented since Swiss cheese, and it's going to save the world. We're going to have the whole, now that's fine, but that's a small portion. It's a vocal portion, but a small portion of the big environment or ecosystem of Bitcoin enthusiasts. For example, in April, Magnify Money, which is a subsidiary of Charlotte, North Carolina-based Lending Tree, did a survey. Admittedly, it was 1,000 Americans, and I don't know how they chose them. And they answered their phone, which puts them in a certain class to begin with. But nonetheless, when polled, when those 1,000 people who admitted owning cryptocurrencies were asked to choose an investment goal, 62% chose to get rich. So there's certainly a lot of in another Newsweek article in mid-April, estimated, and this, I'm not going to go into the details of the survey and how it was done, but it was supposedly with a 3.1% margin of error, backed by all sorts of census data on demographics, et cetera. 46 million Americans, according to this study highlighted by Newsweek, already own some fraction of a Bitcoin. And that's, by the way, with a minimum income of 50,000. So you might say, what's your point? If 46 million Americans earning more than 50,000 own a fraction of anything, that's a pretty big group. And it's pretty, I think the market penetration is a lot higher than people recognize. So there's just a huge band of people out there, and to suggest that any one investment objective right now, other than making money, is really ruling the Bitcoin marginal trade, I think is a mistake.
Trey, I see that we just have a handful of minutes left for our conversation. Where do you stand on Bitcoin as an investment?
Jealous. It's been, spectacularly successful. We all had the opportunity to get involved. Just a small investment in any portfolio, if you held on to, would be a life changer. The folks who are behind it are getting fabulously wealthy. There's never been anything like Bitcoin in the history of the financial sphere. It's made, we've gotten to $1 trillion valuation faster than anything ever. And I'm jealous. I'm very respectful. I think that Bitcoin has, the network itself has never had a breakdown. It's never been corrupted. It's never had a problem. It's never been, I guess there's some problems with stealing each other's Bitcoin, but the thing is an amazing invention, accomplishment. Some of my friends who are Bitcoiners love to say it's the most amazing creation of the human mind. Now, having said all that, it's pretty speculative, and to individuals who are a lot of the people who talk about Bitcoin, to have a portion of your wealth in Bitcoin is a phenomenal opportunity. And I think over the next 10 to 20 years, it's probably going to make a lot more money. But in the institutional world, which is where I spend most of my time, there's a very small percentage of people. If you're Paul Tudor Jones or, like Skybridge or, Guggenheim, these firms that are, very large, very broad, and have a lot of categories to fill, it makes sense. But if you're the city of Houston or the state of Alaska or, Columbia University endowment, I just don't see that happening for 10, maybe 20 years. And the irony there is gold gets, one of the more popular things to say these days is that Bitcoin is leapfrogging gold. And I actually believe that, the gold bull market that people say is over, it hasn't really started yet in the institutional world. I mean, institutional endowment commitments to gold are still less than 1%. And I still believe that if, the biggest trade over the next 10 years is going to be bonds being sold. We don't want to get sidetracked into that, but with, yields near zero and the 40-year bull market in bonds, I think bond allocations are going to be reduced over the next decade. And that's such a large amount of money. If you start with the 275 trillion that's in global assets and you look at how much is managed and you assume a 40-60 mix, you're talking about 40 or 50 trillion that has to find a place to go. And Bitcoin is still 650 billion in market cap. Now the Bitcoiners will say the solution is Bitcoin's market cap has to go to 40 trillion, which is of course what we've said about gold. So I get the argument. But I think that to assume that that money is going to go to Bitcoin before gold is a mistake. And I therefore think there is this bull market and institutional representation in gold markets that's still ahead of us.
Trey, thank you very much for your time.
Sure. Thanks for having me.
He's Trey Reik, managing member of Bristol Gold Group. My name is Michael McCrae, mining audience manager at KITCO. KITCO, your number one source for precious metal news. You've been watching Mines and Money Keynote Fireside Chat, Bitcoin versus Gold.